Good morning, everyone. Thank you to the Bangalore Study Circle group to allow me to present this topic. Uh, Before starting this topic, I would just knock the journey. When I was part of RRC Mysore, Raghuraman sir visited us last day, and he was sharing one thing that whenever he receives a show cause notice, him to be undisturbed for at least next 1 to 2 hours. So that was very, was it was very new to for me to learn this. Now I was thinking that what to do with this show cause notice for next 2 hours. So then the process started of the learning. Our daily meeting group, guided us pretty well. Jatin sir's book, was a Bible to us, and with everybody's support, I was able to draw a small checklist, right? The checklist is for the show cause notice. So whenever a show cause notice comes to our office, then what are the things which we should take care of, right? So I've written three things below. Filling the below checklist will help us to decide the strategy in a better way. So the conclusion, the takeaway for filling the checklist will be to point out the proper strategies, and accordingly we can choose what strategy which we should use for a particular show cause notice. uh, this is something which comes to my thought process that this weekly learning, daily learning, attending seminars is done by us. What about our team? Okay, we have weekly sessions for our team, but again, the learning which we have, we do not pass on to the members of the team on a very regular basis. So this checklist can be a way, a mode through which we can ensure our team follow or implement our learnings in our assignments, right? So this is something which I thought of, and I've prepared the checklist accordingly, right? uh, Seniors, mentors are requested to please guide me wherever they feel that I am off the track, and yes, I will continue. So so this is a show cause notice which I have chosen for you guys as a sample, right? So this is a show cause notice issued by a central department in West Bengal. So if you see, this is only piece of paper with respective RUDs we have received over speed post. Nothing intimated over mail, nothing intimated over portal. So from the first I have pointed this. You can see it is from the state. Sorry, from the central department. DIN number is there, but again, when we go and find a DIN number, we see that what is only written that this particular proper officer has issued a document. That's it. Even SSC name is not there. So to my understanding, I feel that they might issue one DIN number and they can copy paste that one DIN number to various communications, and we might not be able to trace that if we are not having more than one communication on the same date from the same officer. So this is something, DIN number was applicable always, but again, how will it be useful to understand the authentication? We don't know. In this, if we come down and see, show cause come demand notice is written, DRC01 is written, that's it. So no summary of the show cause was given along with this. No DRC01 was uploaded in the portal along with this, right? So uh, I will also share one learning which I have learned during preparation of this checklist, right? I will surely share that. Please, mentors, share the view. Okay. So if you I'm just scrolling this is a 10-page show cause notice. I'll just scroll slowly each and every page to understand what are the things we can see first in a show cause notice, right? And then I will take you to the checklist and which I have filled on basis of this show cause notice. Right? So if you see, they have said that it's a contravention of 16 subsection 2, read with rule 36. Then if we see, it is uh, Again, they have written that you have passed, so sorry, you have passed the same amount of ITC, contravention of, again, violation of section 31, read with, so sorry, read with section 9, right? Read with section 9. Okay. Then if you see, in the brief fact of the case, they have written that the background of the matter is from anti-evasion. The anti-evasion unit was doing something, and on the basis of that, they had subsequently issued a show cause notice. Now, the show cause was issued by the range office, but the investigation was done by the anti-evasion, right? These are the parties or vendors who deems to be fake, non-existent. So accordingly, they have listed down the vendor's name, the amount of the this, and they have also in this particular matter, all the 21 vendors, they have issued alert circular, right? So all the reference of the alert circular is mentioned in the last column, in which it is said that this alert circular was issued for these respective parties, that they are non-existent, right? Okay, so if below 2.2, if you can see, it is written that incident report and alert circulars was issued, and accordingly, it is done then. Okay, so second point was 2A versus 3B, right? So it is downstairs. Okay, so this is a basic show cause notice, if we can see. And one thing I want to just point it out in those show cause notices, in the last page, what they have done is, um, they have summarized the charge. They have summarized the charge, and the charge, they very casually wrote interest applicable as per section 50, penalty applicable within read with section 122, 74(1) and 122. That's it, right? So this is a basic show cause notice, which in Bengal we are getting. Acha, this show cause notice is for cumulatively 5 years, 17-18 to 21-22, right? So now I'm going to the checklist which we have tried to prepare. Okay, so this basically checklist is something that we will list down something, a few important parameters and things, which let's say a junior in our office can prepare, and then come down to our table, right? So name of the distinct person, mention legal name and trade name, file number in case you maintain a file number in your office, GST number, it is a private limited company or a proprietorship firm. This information will be useful if we handle the matters of, reverse charge mechanism, where there are parameters for body corporate, non-body corporate, right? Primary address. If your case involves something with related to additional place of business, then we can also add that. Background of the client: he's a manufacturer, exporter, dealer, what he is, and he deals actually what he does, and what he deals with, right? So because we all are having matters and we even don't know the nature of the business, so I felt that this is very important, right? Next, as per the portal, what is the jurisdiction of the client? And the again, this is very important because state is also issuing notices for the central, so this is very important to note. Again, I have also mentioned GST ID password here only, because if this one sheet is coming to my table, I would like all the information to be completed here. Okay, this is again an internal checklist, that whether the instructions, the notes, scope of work, commercials, flow chart, what will happen if a show cause is not answered within 30 days, pre-deposit required 10% before going to first appeal. All this has been communicated in a written format to the client or not, right? So this is one, this point resembles that process. Okay, so now we come to the actual what happenings. So notice actually issued by center or state, it is center. So if you see in point number 8 also, we have pointed at the administrative jurisdiction is center, and the notice was issued by center only. Name and designation of the officer who issued the show cause notice, right? So it in this particular thing, this is Mr. Chattopadhyay, Assistant Commissioner, CGST, Central and Central Excise, Bali 2 Division, Howrah Commissioner. I also urge my team to also mention room number, mail ID, and phone number, so that whosoever visit department also have a handy location at which in which building, in which floor, in which room number we can simply go and entertain the officers. Okay, this is again important. And before this checklist, I was missing on to check this repeatedly. This is who is the proper officer to issue show cause based on the section and the monetary limits. Circular 3 by 3 and circular 13 by 3. Sorry, 31 by 3. So I have written yes simply, but I have also opened the both the circulars, and according to the notice, I have written that as per circular 3 by 3, it is deputy commissioner or assistant commissioner, and as per circular 31 by 3, it is deputy commissioner, assistant commissioner. So both the circulars we have to check the monetary limits, the power of the officer is there or not to issue the said show cause notice. Show cause issued in which form? So in my case it is manual. So now friends, I'm trying to prepare this pointers for strategies. This is what I was talking, that we will list down all the pointers for strategies. And what I learned from mentors, it is not important to use all the strategy at all given point of time. So we have to choose our battle, we have to choose our strategy, which on basis of which we want to move ahead. So we'll put a filter on this, and then we will discuss the best strategy for this particular show cause notice. So in this case, a show cause was issued manually. The show cause was issued under section 74 subsection 1. Now in this date and time of service of the notice, I've written this intentionally. What happened was the client is not sure enough that when did they receive the post. They only gave me a show cause notice, the date of which was 27th of September 2023. Subsequently, I inquired that the post reached to the office on 3rd October 2023. So the time and serving of the notice is the serving of the notice and not the issuance of the notice. So if we feel, we can also add a column of issuance of the notice, or else we have to be very careful on this, that what is the date and time of the service of the notice. So in this particular case, it was 3rd October. Friends, this was a manual notice. When it comes to the online, either through mail or through portal, then the date it is uploaded in the portal or mail sent, it is deemed that it is served or communicated. Recently, there was a judgment, I guess, which said that only being available in the portal is not communication. So communication is when it is received, when I actually see it. So again, we are not going to that discussion, which usually junior practitioners like us do not give that relevance. Okay. Mode of issue of notice, registered post, digital signature. Friends, again, in this particular notice, we had a manual show cause. It was manually signed. But for the online notices, in my limited experience, I saw very few DRC 01 and show cause notice actually digitally signed. If there is a proper show cause notice in a PDF format, sometimes it also gets signed, but I have never seen any DRC 01 signed. Right. So this is again a very important pointer, that if we can use that whether it is signed or not, and we want to challenge it or not. DIN number validated. Again, DIN number need to be validated from the GM portal only. Backdrop of issuing notice. In this particular notice, the backdrop was anti-evasion, which I came to know about only through the show cause notice. Now, friends, again, this is a very practical difficulty which I face in my practice, and a solution was also there through this checklist only. What happened was, when I was discussing this show cause notice from a client with a client, he was not aware of the facts. Everything I am not aware of. So in the show cause only, I got the word that there was some proceeding from anti-evasion related to this, but he was not able to provide me anything. Now I have written something in conclusion column that various summons followed by various anti-evasion. So how do I, friends, my voice is audible?
Yes, Abhishek, it's audible.
So sorry, yeah. So this why I have concluded this and how I have subsequent serial numbers. But this is very important to understand that the backdrop of the issuance of the notice is very relevant for us. The strategy which I have pointed out here is, since now we are aware that various DRC 03 has been already issued, so they should have also given DRC 04, but they have chosen to give a show cause notice on the same amount, right? Okay, last date of issuance of show cause notice. This is now relevant for 73 specifically. Contravention of which sections or rules have been pointed in the show cause notice. So, friend, in different paragraphs, they have indicated different cause of actions. So, somewhere they have written 16 subsection 2 read with rule 36. That is ITC. Somewhere they have mentioned section 31 and 9. So, if it is section 31 and 9, what they mean is, I am taking ITC, I am passing on the ITC. If that is there, then circular 171 comes to picture and only penalty is leviable to me. But they have not mentioned, they have not drafted the show cause accordingly. Subsequently, they wrote 2A versus 3B, but along with 2A versus 3B, the contravention provision they mentioned only 16(2)A. So I was not sure that how 16(2)A is connected with 2A versus 3B, right? So this contravention was show cause notice. I have tried to list it here. So DRC 1 issued. No, it was not issued. DRC 01A was even not issued. So if it had been issued, then I would also like to, if it is filed, okay, the details of the part A and the demand of the DRC 01A and the demand of the show cause is matching or not. So this is again to one of my experience. I am sharing that in DRC 01A, I got of 7 lakh rupees, right? And when I got a show cause notice, it was 4 lakh rupees CGST, 4 lakh rupees SGST. That is 8 lakh rupees. So I don't know whether it is, I'm sure it is not matching. But again, the DRC 01A was not giving the picture accordingly. And now they had a breakup. So it was, IGST was a negative figure. So that was cumulatively coming minus 1 lakh, 4 lakh CGST, 4 lakh SGST. That is 7 lakhs. But in DRC 01, it was 4 lakh CGST, 4 lakh SGST. So again, we can also keep a note of this. Okay, coming down to this show cause again. This show cause was having relied upon documents, and that was incident reports and alert circular issued against this. So to not having any clue whether the recovery has already been made by these parties or not. Okay, whether are you to include any third-party statements? In my case, it was not there. Now, in my particular matter, does show cause mention about any statement recorded under section 70? Answer is yes. The proprietor was was summoned twice, and he went and gave a statement twice. In the show cause, it is mentioned that the proprietor admitted that yes, he will pay the amount, but he needs some adjournment or deferment or installments. So the statement, his statement, what was recorded, were also made RUD 02. So this was a question to all the seniors and mentors here, that this can anything cross-examine. So in this particular matter, can retraction of the statement can be done at this level when the show cause was actually received? Can after receiving a show cause also, we can file a retraction of the summons? Will this be of any use to us? So this I will later on, when I complete, I will love to understand. Subsequently, then we should break down the amount of demand as it is in the show cause notice. So this checklist is copying the data from the show cause to the Excel sheet. So what is the nature and amount of the demand? Demand is properly computed or not. So in this, if you see the total demand is, the tax amount is 1 crore 73 lakhs 20,000 to 34. If you go to note 1, so sorry. Yeah, if you go to note 1, so what is seen is issue 1 is ITC by fake suppliers, 66 lakh 98,000 CGST SGST, interest as per section 50, penalty as per section 122. And the second matter is 2A versus 3B, 19 lakh 61,000 CGST SGST, interest 50 and penalty 120. Friends, again, as our daily meeting and guidance by Jatin sir, this is very important parameter now. They have only pointed 122. They have not specified it is 122 subsection 1 or 122 subsection 2. So we can also consider this as a pointer for strategies. Right? Okay. Now, taxing ingredients. This is also a learning from sir's book, that something is demanded, right? So I've copy pasted the entire taxing ingredients from sir's book, and in all those matters, one ingredient was only getting fulfilled, and that was condition of section 16 subsection 2. For the benefit of the team, we are just showing the taxing ingredients. So the taxing ingredients for output tax is all this: HSN, near time of supply, PO, place of supply, whether price is the sole consideration or not. This is for the output tax. For the ITC reversal, we have to see that whether credit is barred because it is not in the course of furtherance of business, whether credit is diverged due to non-fulfillment of vesting conditions. In my case, 16.2 is according to the officer, according to the show cause notice, condition of section 16.2 is not getting met. Isliye this is the ingredient of a taxing ingredient, right? Accordingly, 71, 72, 17.5. For the refund matters, there are also pointed four parameters that failure to demonstrate accrual of right or refund or as permitted. So as and when a show cause comes, and it will evolve in around these three areas, so we should also keep an eye of this taxing ingredients. Friends, there has been multiple more checklists in the book, but again, that was more of advanced level. So I thought to prepare this and practice this checklist, and accordingly will incorporate as an slow. I'm a very slow learner. As a slow I learn. So next is, since we have communicated the client in earlier stage that whether you want to avail the benefit of 30 days or not. If a show cause is issued and you pay the amount within 30 days, in this benefit of penalty, right? So we get a confirmation over the mail or something, confirmation from the client, and we accordingly confirm this, that no, client is not interested to get the avail the benefit of 73.8 and 74.8. Okay. We also ledger, and we should also keep a track on this, so that this will help in decision making, that okay, ITC's ledger is maintaining, the balance is maintained there, so it will be not a revenue crunch to take a decision. So this will be also a decisive factor. Thing which I've incorporated on a very practical basis. A client coming to our office is sometimes not aware of the happenings in the past, so they are not sure what happened, who paid, the previous accountant paid, the previous director paid. They are not aware of this. So friends, when I got a hint from the show cause notice that there was something, some proceeding of anti-evasion, and they were not sure what happened, what not happened, so my team took the login credentials, went and downloaded the entire credit ledger, cash ledger, liability ledger, and all the DRC03 filed. And on scrutiny of these things, we able to understood that whatsoever amount they are demanding in the show cause notice, more than 50% of the demand has already been paid, already been paid by the RTP, and a proper submission was also been made along with DRC03s. The officer has chosen not to give DRC04, but has also initiated the proceeding under show cause notice. So this is something which is practically we have started doing and was very useful to give suggestion to the client. So for specifically input tax credit ledger balance, input tax credit reversal demand, if the amount is available, let's say if you are claiming a credit on immovable property and they raise a demand. So we have to choose that if the demand, if the ITC is still there in the credit ledger balance. So that will be again a good decision factor for the client to be shared. Again, this is a very basic checklist again, that the copy of power of attorney is shared or not. If the synopsis of the hearing is to be prepared. Uh, okay. Is extended period invoked in the show cause notice? So we always see a paragraph that they write that why they are extending a period of a show cause notice. In this particular show cause notice, they mention that since 2A versus 3B, there is a difference. In 2A, their figures were not coming. You have still taken the figures in 3B. So that tantamount to misstatement. Since that is a misstatement, I will invoke 74. So friends, to my understanding, what I've written in the pointers for strategy is, number one, it is not a misstatement. Number two, it is not for evasion of tax. 74 Oxford comma, it says that it has to be for evasion of tax. Since it is not there, 74 cannot be invoked. Again, this is a pointer for strategies which can be brought from this checklist. Okay, number of days given to submit the reply and last reply. This show cause was very vague. It was mentioning no date of personal hearing, no date till what time I should reply to the show cause. So friends, this is what 47 point. I am sure it is quite long thing, but I guess there could be more 30-40 points. It is only a basic checklist which I tried and accumulate. And over to the mentors and seniors.
Thank you, Abhishek. Abhishek, couple of points where you have mentioned, wherever you have mentioned, say it's reference to section 122, but definitely not 122 and not 2A or section 169 on serving. So what is the I'm not asking ground of appeal, but what are the points that needs to be considered? Is it condonable, not condonable? Can it be only ground, or should it be used, not to be used? Any thoughts on this?
Right, sir. So, in this particular show cause, let's say if I go and point out that DRC01 was not there, if I point out that let's say it was not served properly, so it might not stand because there are more big flaws by the department. So I will simply rather point either that please issue DRC04 and you cannot run dual proceedings, or rather I will go and ask ki, please specify what is it, whether it is 122.1 or 122.2. If I do this, they will fall in trap. They will try to answer this, and they will fall in trap. They will miss on the circular 171 instructions, and in a higher forum, I guess this will be resolved. This entire matter will be dropped.
Okay. Jatin sir, Rajesh sir, anything to add?
Jatin sir is there?
Sir, since the exhaustive checklist, it's a good approach so that we don't miss on some of these essential factors or anything specific to add. Just one thing we have to be cautious about is department has argued that what is the violation has been clearly communicated. Misquoting of the section cannot result in demand being dropped straight away. We have to show that misquoting is so serious that it is not misquoting but a deliberate quoting of the different section, and to now correct the notice into a different section amounts to an altogether new notice. We have to be very careful. Is it really something that can be saved by 160 subsection 1, or it cannot be saved by that provision? That aspect we'll need to keep in mind. But otherwise, this checklist can be very helpful.
Yeah, I think I should also appreciate the effort and this thing which has gone in preparing this. Very quite exhaustive and quite informative for all the participants who want to get into this particular process of litigation. I want to add a couple of points, and out of my experience, what generally do come in certain points to maybe improvise this or to keep in mind while using this particular checklist. First and foremost thing, I think in this thing, we are starting directly from the show cause notice stage. But practically what happens is, the client comes to us either at this time of audit or at the time of the DR01A or at the time of investigation and resulting into a notice, then it comes in. So when we are using this checklist, probably this is the one where directly the client comes to you at the time of show cause notice and does not come in the earlier stages. Because if earlier stages does come in, then the various other factors which we discussed in this course of the study circle meeting, I think you need to keep in mind how to approach, etc.
Right,
Second, I always see that when you ask for a complete set of communication documents which have been exchanged between the department and the client, would generally give us much more insight into the case and some information which has been given, because the person whom you will be interacting may not be knowing the entire information. So my additional approach to this is, first, you need to have a client interaction or a client discussion as to what all happened, how all it happened, from when it started, how it started, all those things to better fill up this information or a checklist. Otherwise, the person who will be filling will have no idea as to how it happened, what is the background, and many of the things what will be there in the notice is only what is written, which is favorable to the department, and what is favorable or which is going to help the taxpayers might not be forthcoming in the sequence which should have been mentioned, or what are the facts that are mentioned. So better have a discussion with the client to understand what all discussion happened, what all information they have submitted, whether that can give you an additional insight is a one thing. Second aspect is that many a times we will be prepared based on what is seeing and only from one perspective. Before we talk anything or understanding the facts or telling our approach, we need to listen clearly and carefully what the client wants to say, because we will jump to conclusion based on certain our past experience or past similar case handled. But each case is not the same. Though it appears to be the same fact which is mentioned, but the certain critical or minute facts which the clients can explain, or his approach or his thought process can change our approach for the show cause notice. So again, the discussion or listening of a client and client's interaction is much more important in addition to we preparing this, is what I want to just add.
Right, sir. Pointing it, sir. Sir, just to
probably in the sequencing, factual aspects be coming out, then get into the pointing out. See, in the facts, what happened first, what happened next, what happened subsequently. If you can arrange the checklist based on the eventual facts first and getting into a technicality, the person filling in would have already got what has happened in the beginning, and he'll be in a better position to appreciate the provisions or the analysis of the applicability of provision at a later point in time, rather those points coming in at a later. Say, for example, how did the proceedings got initiated? If it can come first, then
Right.
getting into jurisdiction and all those. The sequencing can be improvised based on the approach which one has to take.
Sir, I tried also to put this manually on the file, the brief description of the matter, date-wise, what happened, what not happened.
Huh.
So before filling the checklist, a person, a junior come with this. When they have a discussion with the client, then what was the first event happened, what exactly happened, and do you have that copies or not? What we can observe from this. I've tried maintaining this, but I have shown that I will incorporate all these things.
No, need not be copied, but only thing, the step by step. You can, in fact, probably your team can be prepared where break up this into a stages at the investigation inquiry sort of a thing can also become actually like a manual.
Perfect, sir.
Yeah, with input from Jatin and in fact Sai Prasad would be coming out with some legal part. Sai Prasad is there. Okay.
Any questions from any of the other participants? Any points? Anything you would like to add? Okay. I think we will move to the next part. Thank you, Abhishek.
Thank you so much.
And I'll also upload that into our drive.
Right.
Yeah. Ganesh?
Yes, good morning, sir.
Can you share the screen?
I think I'm disabled from sharing screen right now.
Try. Yeah.
Inside. Morning to all the participants and mentors of this group. And thanks for this opportunity for allowing me to take a deep dive into this issue, Section 16. We have discussed in plenty about this Section 16 in different forums, including this forum. But my gut feel is how much ever we do research, take a deep dive into this provision of ITC, it is never enough, never enough. Thanks to this group, if this subject was not there for me, probably I would not have, analyzed and did a bit of research on this topic, which may leave some leaves for all of us to carry in our professional endeavors. So Section 16, the biggest problem in Section 16 everyone is facing is 16.2c and 16.4. My main focus will be on 16.4 time limitation on claiming ITC. When I decided to talk on this, dwell on this topic, I was, I was forced into consider two aspects, two propositions or two way of interpreting this entire provision in relation to claim of ITC within the time. The first proposition is with respect to certain, very, very, technical words used in Section 16, like taking the credit, availing the credit. And I thank to Jatin sir and Rajesh sir for shedding some light on my issues, doubts I had in my mind while preparing for this topic. So my first proposition was to take each word with a radical approach to understand the meaning of the word and try to decipher what is contemplated in the law as regards claiming of input tax credit. And second is overall interpretation of the section 16 as regards having regard to the overall purpose and objective of the entire GST law, more specifically provisions dealing with the input tax credit, right from the 101st Constitution Amendment Act 2016. So I will just start this presentation. So the overall objective of input tax credit, it's nothing new in GST. It has been there since long time, right from the time MODVAT, SENVAT, and also in the state VAT in respective states. This input tax credit is something not new. But coming to GST law perspective, the objective was very clear right from the stage when the Constitution 101st Amendment Act was passed in the year 2016, which had set the goal or purpose was to remove the cascading effect of excess. It was one of the main objective, and then provide a comprehensive set of input tax relief. Comprehensive in the sense, it's a substantial and end-to-end comprehensive set of mechanism of all the input tax the business person may incur while carrying on the business. And then going back to 2009, when the GST first discussion paper was presented by Empowered Committee of State FMs, it was stated that cascading effect of SENVAT credit and service tax are removed with set-off and continuous chain of set-off in the GST, in the envisaged GST law, which is going to come. So this slide is important because I put up this slide because to give an indication, drive home a point that what was the objective purpose behind bringing this a set of provisions in relation to claiming of input tax credit by the taxpayers. So from this slide, we can make out that the overall objective was to make sure there is a continuous chain of set off and carry forward of input tax credit right from the stage of the producer, manufacturer, till the stage of consumer, retailer level. The entire chain is unbroken. So this is something very ideal way of approaching towards GST ITC mechanism in GST. But in reality, we have seen there are a number of restrictions which are placed. They are called fetters or restrictions, or the claim of ITC is riddled with so many difficulties on the way, shackles which are placed as a policy matter of the government. So in the light of these objectives and the restrictions which are placed on claim of ITC, we need to see where we stand. We try to see the expectations and reality, and try to see make a balance with this through this discourse. In order to achieve the objective what was set in the Constitution, the Central GST Act, Section 16(1), which is the section which defines the overall scope or eligibility, which confers the eligibility or entitlement to the taxpayer to avail the benefit of input tax credit, which specifically uses the word take credit of input tax, subject to restrictions which may be placed by way of rules. And then section 16(2), 3, and 4, subsection 2, subsection 3, and 4, they come on the way restrict or limit the entitlement which 16(1) provides to the taxpayer to claim the input tax credit. 16.2 and 16.2 is actually starts with a non-obstante clause, notwithstanding anything contained in this section, which generally everyone takes a view that it even overrides 16.3 and 16.4. But as we go along, we'll further elaborate on this, which 16.2, whether it overrides only 16.1 or it also overrides other subsections of 16.2. So 16.2.3 provides certain additional restrictions, conditions subject to fulfillment of which the benefit of taking ITC, not availment, taking ITC, the entitlement to take the ITC can be fulfilled by the taxpayer. And subsequent to taking the ITC, the stage comes of to avail the benefit of that ITC by filing a GSTR 3B return or any other online form on the GST portal. But generally, regular return filing, frequent, critical returns which we are filing through GSTR 3B. GSTR 3B is the return through which ITC is availed, which is already entitled by the taxpayer to avail through, fulfilling the conditions defined in section 16.1 and 16.2. Which is read with section 49, 41, 59. They all deal with the manner of availing the benefit of input tax credit, how the ITC to be availed. So two propositions I have. The first proposition is that the input tax credit is a 4-stage sequential statutory process. So in my view, there are 4 stages which I can make out from the reading of the provisions of 16 and 49, 41, all these sections. There are 4 stages through which the ITC can be claimed or availed by the taxpayer. Second proposition, where 16.1 and 2 can be connoted as having a or operate as an extinguishing prescription, which means they define the overall scope and limits or limits on the entitlement of the ITC. If you don't fulfill 16.1 and 2, you are out of the purview of claiming the benefit of ITC under section 16. Whereas 16.4 is only can be rendered as a provision which operates, which puts a limit on the time within which one need to claim, ITC under 16.4. But even without, even if you, in case you violate 16.4, the vested rights or entitlements what 16.1 and 16.2 you have benefited from doesn't get extinguished. So we'll go along further. Second proposition I will come towards later part. The first proposition where I'm saying it is a process having 4 stages that I will try to elaborate and discuss. So the 4-stage sequential process, when I indicated, it is about taking the ITC into the books of accounts or records based on the supporting documents like tax invoice, bill of entry, whatever documents which are specified, prescribed in the law. So as long as you are having all the documents, you are taking the credit in the books of accounts or records, you are through with first stage. The next stage is to assess the amount which you are eligible out of whatever ITC you have taken in the books of account. Everything may not be, you may not be eligible to avail. So availing the credit is merely transferring the assessed ITC amount from books of accounts to the input tax credit ledger, which is maintained on the GST portal. Okay, so availing credit is there is a difference from taking the credit into the books of accounts and then further availing it into the ECL. The third stage is as a byproduct of claiming availing ITC through filing GSTR return or any ITC 1 form, for example, in section 18. it as a byproduct or as a resultant of which the amount gets credited into electronic credit ledger. So from books of account, the amount goes into electronic credit ledger via filing of online returns. The last stage, which is not so important, is the utilization of the credit, which has hit the input electronic credit ledger on the GST portal.
Ganesh, I just
Yeah.
want to interrupt. So, are you propagating that 16.4 is related to core books of accounts?
Yes.
Now, how will you satisfy 16.2D? Unless you have taken into electronic credit ledger, how can you call that as an input tax credit? If that is not an input tax credit, then how can we talk in 16.4 about input tax credit, which is not an input tax credit?
Definitely, there are contradictions between 16.2 and 16.4, where the word the non-obstante clause notwithstanding will play some role.
No, I'm not
I
talking
will-
about 16.2 overriding 16.4 or not. I'm talking on the basic premise on the definition of input tax credit itself. Like if you see the 263 input tax credit, which says the credit of the input tax. Now, this input tax, if we have to talk about the credit, unless I have taken it into electronic credit ledger, can you still call it as an input tax credit of yours? Just because it's in the books of accounts, will it become input tax credit for you?
No, and as long as it doesn't travel into our electronic credit ledger, we cannot call it as a electronic, input tax credit, because
Now, if it doesn't call it as input tax credit, then when 16.4 reads, a registered person shall not be entitled to take input tax credit with this. So when you're reading 16.4 to the books of accounts, the word input tax credit here, how can we relate only to the books of accounts?
because the
Sorry, I'm
word
disturbing in between.
yeah, no problem at all. No problem, sir. So the word 16.1 at various places it uses the word take input tax credit. It doesn't talk about availing, because availing is through filing return under section 49, read with section 41. So 16.1.
Now only you have said input tax credit means taking into credit ledger.
Yeah, but to avail to take the benefit of input tax credit, but in order to entitle or to restrict the entitlement, which we see 16.4, people are saying that it is a prescriptive section. I'm trying to say 16.4 doesn't come on the way as far as your entitlement to claim the ITC is concerned. As long as you are fulfilling 16.4 by claiming the ITC in the books of account, let you file return maybe after 6 months beyond November 30th November. Your 16.4 still doesn't come on the way. As long as you're fulfilling 16.1 and 16.2 conditions, it is meant for a furtherance of business. And 16.2, all the 4 or 5 clauses which are there, all the conditions are fulfilled. The inchute right or the ITC becomes a vested right, vested right for you. And then 16.4 shouldn't come on the way, because 16.4 is kept as a separate section. It is not merged with 16.2.
I agree, but okay, I'm still not convinced. Maybe.
Yes, maybe over the course of discussion,
Yeah.
certain
Okay.
clarifications
Venu,
may
you
address
need
this.
not be convinced.
Yeah, no, sir, not about convincing. I'm saying it is his statement is contradicting. When we say input tax credit itself, the definition, it cannot be input tax credit unless it's there in the electronic credit ledger. If we say that, then we cannot use this as books of accounts, is what I am saying.
Yeah, no.
Or if he says input tax credit could be anything, then I'm okay.
No. Why I interpreted at this point is, unless we have an open mind to listen the further points, if we are blocking our thought process, we can't entertain any further submissions of his. So Whether that is the point I said. The convincing, not convincing is not the point of discussion. Let's
Yeah.
listen the entire overall line of argument, line of thought process. That's all.
Yes, sir. Yes, sir.
Okay.
Yes. Yeah.
So we agreement, not agreement, we'll do it at the end.
No, I'm not talking. I felt there is a contradiction in the statement. That's all.
Yeah, will note it and we'll continue.
Yes,
No
yes, sir.
problem.
Yes. Yeah.
Right. So this is the overall the snapshot of section 16, where 16(1) entitles a person to take credit of input tax subject to the conditions that it is meant for furtherance of his business, and if there are any restrictions, any conditions placed in the rules, those conditions also need to be fulfilled. Plus section 16 subsection 2, which puts additional conditions. There are subclauses A, double A, B, A, C, D. All these conditions, we are well versed with these. All these conditions, once these are fulfilled, the in-short right of claiming ITC, which is with the taxpayer, becomes a vested right as soon after all these conditions are fulfilled. Then 16(3), which is not so material for us for discussion, and then 16(4) shouldn't come or would not come on the way to get the benefit of claiming the ITC. So here, when I say taking the credit of input tax, here I do not mean taking the credit into the electronic credit ledger. Here I mean to say it is a ITC which I am taking into my books of account based on my tax invoice or supporting other documents. So it is not about claiming taking the ITC through the return, but it is only taking the ITC in the books of account. And then following the same, 16(4) also uses the word take input tax credit in respect of any invoice or debit note before 30th of November following the end of the year. So as long as I am claiming the input tax credit in my taking the input tax credit in my books of account before 30th of November next following year, I am well within my right to claim to avail this benefit. And 16(4) nobody should object. Department should not object claiming the input tax credit before 30th November. So 16(1) enables, it's a positive proposition provided in section 16(1), which enables certain rights of claiming ITC on the taxpayer. And then 16(2) withholds or restricts or puts breaks or limits the rights or entitlement which 16(1) is provided. And then there are conditions, 6 conditions are there. All those 6 conditions on fulfillment of which you become entitled to claim. It becomes your property, a vested right. So unless without the authority of law, and nobody should confiscate or take away that power under Article 300A of the Constitution. Whereas non-compliance of any or all the conditions specified in 16(2), then you become ineligible to take to be entitled to get the benefit of this input tax credit. So all these conditions are cumulative conditions. All those have to be fulfilled. So 16(4), as I told, as I already mentioned, it's merely a procedural provision which cannot thwart the vested right granted under fulfillment, granted by fulfilling or in compliance with 16(1) and 16(2). So 16(4) is merely a procedural provision. So when it comes to, there is a lot of discussion, including the discussion happened in Tirumalakonda plywood case, where 16(2), because it uses the word notwithstanding, non-obstante clause, it starts with, there was a proposition that it even overrides 16(4) as long as you are filing return and fulfilling 16(2)(d) condition of filing the return. you are well within your rights to claim the ITC. So here my limited discussion is only towards interpretation of the word non-obstante clause in, which is non-obstante clause when there are multiple subsections involved in the main section. So the summary, one of the paragraphs from GP Singh I picked up, which says, in case a non-obstante clause is generally appended to a section with a view to give the enacting part of the section in case of conflict and overriding effect over the provisions in the same or the act mentioned in the non-obstante clause. So here, 16.2 and 16.4, when we do a comparison, if you see, there is overall, if you see at the at a helicopter view, you will see that both are restricting conditions. Both are conditions which are limiting the entitlement of ITC. But if you go a little deep inside, like when you said 16.2D, you will find a conflict between 16.2D, for example, what he mentioned, and 16.4. Because 16.4, talks about, claiming of ITC within November of last year's invoice, and that you cannot do without filing a return. Under 16.2D, you have to mandatorily follow. So, coming back to this, interpretation of this notwithstanding non-obstante clause, when the general understanding or general view of the courts is that when there are two clauses which are contradicting with each other, and in case there is a conflict between each, and there are the purpose of both the provisions are different, and there is a conflict, then the enacting part of that section will override the other section. So in this 16.2, it is purported that 16.2 overrides 16.4 in case there is a conflict. But Tirumalakonda, plywood and all, we have seen, they have said they are not contradicting, but they are complementing each other, 16.2 and 16.4. So that proposition cannot live. 16.3 and 16.4 are not contradicting but complementing 16.2, and all three sections together are limiting the scope and operation of 16.1. So the basic 16.1 and 16.2, as I have already mentioned, they are the basic two subsections which provide a vesting, provides a vested right to the taxpayer on fulfillment of all the conditions cumulatively. The ITC becomes entitlement of the ITC becomes vested right of the taxpayer, and 16.3 and 16.4 are merely they are supplementing 16.1 and 2, but they are not conflicting. So that is why 16.2 doesn't partake the operation of 16.3 and 4. 16.4 also will operate independently. 16.3 and 16.2 also will operate independently. So according to this proposition in Tirumalakonda plywood case, 16.2 operates independently and 16.4 also operate independently. So there is no conflict. So that notwithstanding, proposition which was propounded by the taxpayers council, did not sail through. So coming to the word availment, availment word is used in these sections, section 41 and section 49. Section 49, 49 actually refers to section 41, where it says input tax credit as self-assessed in the return of a registered person shall be credited to his electronic credit ledger. So what it, in accordance with section 41, what it tries to convey, or the provision, the rule, what it is trying to make is, unless you self-assess the tax and credit the amount in accordance with section 41 to the electronic credit ledger, it it cannot be cannot be availed. To avail the ITC, you have to, because it's the title of section 41 is all about availment of input tax credit and not about taking of input tax credit. So when I read section 41, subsection 1, every registered person shall, subject to such conditions and restrictions as may be prescribed, be entitled to avail the credit of eligible input tax as self-assessed in his return, and such amount shall be credited to his electronic credit ledger. So here, availment of the eligible input tax. Eligible input tax, I am again referring to section 16.1 and 16.2. As long as I am fulfilling 16.1 and 2, I am crossing the eligibility eligibility boundary. So I'm eligible to claim the ITC, to avail that, take the benefit of that eligible ITC. I need to file return under section 39 and allow that amount to flow into my electronic credit ledger. So as long as there's as long as the bridge of availing the ITC, which I'm eligible by filing return, I don't perform, that doesn't come in my lap to use it for my benefit or for my advantage. So section 49 and 41 are the provisions which enable taxpayer to avail the ITC, which is entitled, which is his vested right in the sense. So utilization of the ITC is the subsequent thing which we are not much concerned. So the terms, significant terms are take and avail. These terms have got high importance in this proposition. 16.1 read with 16.4 uses the word be entitled to take credit and followed by the said amount shall be credited to the electronic credit ledger. It doesn't say avail the ITC and then it shall be credited to electronic credit ledger. So there is some gap in between taking the credit and flowing that amount into the electronic credit ledger, and that gap is filled by section 49 and 41, which talks about self-assessment of the eligible tax ITC and filing the return and allowing that to flow into electronic credit ledger. So the word take here I'm trying to say taking the credit is the activity of taking that credit into the books of account, and this is something not new for us in GST. Even in the earlier pre-GST world as well, the Senvat credit was Modvat credit in RG23 A register part 1. All those are activities of taking ITC in the records and then using those ITC to avail the benefit subsequently. So GST, what has changed is electronic. There is something called electronic credit ledger which sits in the air, which is not in our control, but it sits with the government authority. So on the portal, GST portal. So that is additional, but that cannot cannot take away the substantial beneficial provision of ITC as contemplated in the constitutional amendment. Also, I just touched upon in the beginning. The purpose was to allow the ITC to flow from end to end, unbroken chain. So just by putting these 16.4 conditions saying that you have to claim ITC by filing a return, that doesn't fly. So also section 18.1 and 18.2 uses the word entitled to take credit. So that is in case of new registration or voluntary registration, or somebody shifts from exempt to taxable or composition to taxable on the whatever stock available on that day, 11th day. That ITC on that stock can be taken in the books of account. And then subsequently, there are forms, ITC, just like GSTR 3B, there are forms ITC1, ITC2, some forms are there. Those forms have to be used as a carrier, as a vehicle to allow that credit to flow into the electronic credit ledger. So section 41 read with 49.2 uses the word entitlement to avail. So here there is a completely contrast you can find. 41 and 49, 41 and 49 2 uses the word be entitled to avail the credit of eligible input tax credit as self-assessed, followed by shall be credited to his electronic credit ledger. So Rule 36 and Rule 40 also uses the same word avail. So section 65(7), which is GST audit 73(1) notice, 74 also notice, also uses the word term. Those sections do not use the word take, because taking the credit is not if you're entitled, you can take the credit, but nobody can dispute on that. But after taking input tax credit, once you avail in the electronic credit ledger by filing return, then there can be questions which can be raised by the revenue. So 65(7) contemplates some ITC related availment only. So at various places, these words avail word is used in contrast to take credit. So 4 stage sequential process, which is the same, which is reproduce the same, which what discussed earlier, taking the ITC into the books of account, and then availing it to filing a return, and then it is credited to electronic ledger in GST portal. That happens automatically, and then its utilization in paying the output tax. So that was about the first line of thought, how we can interpret section 61 2 and section subsection 4 of input tax credit benefit. The second proposition, which I have heavily relied on Jatin sir's thoughts, his thoughts on 16.4, particularly it was around 16.4, and that actually opened my thinking window from my mind, because if I read 16.4 standalone and without giving regard to all other situations or circumstances in which 16.4 can come on the way in claiming input tax, I probably would not have give this proposition which I'm going to give now. And according to this proposition, I'm trying to say 16.1 and 16.2 are substantial provisions which we have already discussed in my earlier proposition, and they are supposed to be prescriptive, means they are the defining the provisions for claiming ITC. There is no compromise, there is no any violation in 16.1 and 2 can straight away you can lose the ITC benefit. So that's why they are also called extinguishing. They're having the character of extinguishing prescriptive feature. So it is a must that you have to fulfill 16.1 and 2. And 16.4 is because 16.4 is talks about time limitation. It doesn't primarily talks about vesting feature. Vesting characters or features are not forthcoming in 16.4. So it is that is the reason because it is around the time limit under which you are supposed to claim the input tax credit. It is called procedural or directive provision as per rule of interpretation by necessary implication. Means taking the overall purpose and objective of the act and ITC benefits which legislature thought to provide to the taxpayers. It can only be called as a procedural or directive provision. That means even if you are filing a return after 30th of November, still you according to this you should be 60. You should be able to claim the input tax rate without any question, because it operates as a procedural, and because any procedural directive provision cannot take away your property under the constitutional provision 300A of the Constitution itself. So unless because we have seen that Gobind Construction of Patna High Court, as well as Tirumala Plywood, Tirumala Konda Plywood. These are the two decisions, as far as I'm aware, which are rendered on 16.4. They rendered that 16.4 is a something basic eligibility or entitlement provision. I mean, 64 is straight away compared with 16.2 and 16.1. Unless you fulfill 16.4, you are barred from claiming input tax credit, is what they are saying. So, so why I'm saying this 16.4 is a limitation, because 16.4 may not generally be the theoretical returns. We might find the situation where I'm crossing 30th November date to claim ITC, but there are various other exceptions or situations where 16.4 can come on the way. And because 16.4 does not contain saving clause, okay, it doesn't say other situations which is something deliberate, or it is not definitely with some purpose. Legislature would not have saved the other situations, other situations wherein 16.4 also come on the way. But if we strictly follow 16.4, the whole purpose of ITC in those situations, which I'm going to enumerate and discuss subsequently, the purpose of ITC will be lost. So, for example, these are all some of the situations I could note where 16.4, where legislature GST law itself, doesn't allow 16.4 to come on the way, where 16.4 actually, in fact, it comes, but these are exceptions which are created within the law, within the GST law itself. When exceptions are there for 16.4 within the GST law, then again, we cannot call 16.4 a mandatory, a compulsory requirement to be fulfilled, because there are exceptions which are carved out within the provisions of the law itself. So first situation is section 18.1. There are 4 situations since 18.1 where there is somebody who goes for compulsory registration, somebody may go for voluntary registration, somebody may shift from composition to normal tax registration, and then somebody may go from exempt to taxable. In all those situations, whatever stock, finished goods which are there lying on that day, relevant day, entire input tax credit on that stock, you can file a ITC1 form and claim that, avail that ITC into the books of account, no matter it may cross your 16.4 timeline. Okay, that too has got a subsection 2 of 18. 18 has got a condition of 1 year backward, the invoice in relation to which that stock in relation to which the stock on which you are claiming ITC, you are transitioning the ITC should be within 1 year backwards. But that may go beyond in 30th November. In case 25th March of 2023 is the invoice date, you can claim through filing ITC1 under 18.1, section 18.1 on next year 2024 till 24th of March, which means you are going beyond the 30th November. So there is a assumption, there is a implied carve out exception to 16.4 within the law itself. The next is business transfer. If somebody transfers the business, it is just like 18.1. Here, Mr. A is transferring his business to Mr. B. So Mr. B is not barred by 16.4. Whatever may be, especially 18.3 is not subject to 1 year time limit, which is there in 18.2, which is applicable only for 18.1. So 18.3, any stock, if I'm right, 18.3 doesn't come on the. Yeah, in case of transfer of business, any invoice, the stock which is lying, ITC, the calculated, computed ITC on that, you can transfer. The transferee can take the ITC benefit. And 16.4 doesn't come on the way. But similar to coming to again Venu sir's issue, which he pointed out, 16.2 AA. Even I have my own argument on this. 16.2 AA for GSTR 1 filed by the supplier, then GSTR 2B uh, 16.2B and 16.2C and 16.2D can potentially conflict with 16.4. Although overall objective of 16.2, so 16.2 and 16.4, both subsections have got an objective to restrict, to put restrictions on the eligibility of ITC. But still, if I go clause by clause in 16.2, I may find these there may be a mutual fight between 16.4 provision which puts a limit on the time, and 16.2 which has got these conditions, especially 16.2 AA. If GSTR 1 by the supplier under 16.2 AA and can claim ITC as long as that person supplier files his GSTR 1 and it comes in GSTR 2B in my portal, I cannot claim ITC is the condition now, which was not there before. But how will I claim ITC in case it is not GSTR 1 itself is not filed by the other person? So 16.4 cannot it's not my fault, it's somebody's fault. I cannot be barred from claiming ITC because of 16.4 restriction. Then 16.2B also, in certain business business model, there can be delivery date of the goods can be beyond 6 months or beyond 8 months, which might result in delivery of the goods beyond 30th of November, where the advice was raised last financial year, maybe in the month of March or February. Even in those cases, there is a conflict between 16.4 and 16.2B. And then 16.2C, payment of tax by the other person, supplier, to the taxpayer. So although there is no mechanism in place, there is no automatic mechanism to check whether the supplier has remitted the tax to the government or not. But assuming there is a mechanism and he is delinquent in remitting the tax, then because of 16.4, I should not be penalized. Similarly, 16.2D, I cannot, for example, 16.2D can have a difficult problem because in case because of cash flow issue, any other problem, I am not able to file my return. Just because I'm not able to file my return, I should not be barred by 16.4 limitation in claiming ITC, because there is actually GST law doesn't give any doesn't restrict you from filing the return, whether you have a cash flow problem or not, you don't have cash to pay taxes or not. Law doesn't restrict. It is the GST portal which has restrictions on filing the return. And if I have if my ITC ledger doesn't have sufficient balance, naturally I have to pay the cash and file the return. So in that case also 16.2D, I'm not able to file my return. 16.2D potentially has got conflict with 16.4. So in those cases, the non-obstante clause, you can take shelter under, and say that you are 16.4 I'm not violating 16.4, but I'm eligible to claim, and I'm very much eligible to claim ITC. So these are again these are all carve outs or exceptions to time limit which is there in 16.4. Then again, 16.2, the third proviso to section 16.2, it is about payment of supplier invoice amount within 180 days. So what happens in case I don't pay within 180 days, I have to reverse the ITC, and maybe after 2 years, whenever I pay that amount to the supplier, I can again reclaim the ITC. So when I reclaim the ITC, 16.4 doesn't come on the way. It may be I may pay after 5 years also. Still, I can claim the ITC. So 16.4 again, it is not an exception to this. 16.4 again, this situation is an exception to 16.4. Then again, proviso to rule 41, proviso to section 41 to read with rule 37A, subsequent reclaim of ITC on payment of taxes by supplier to government. So this is about, I think it has come recently, last year, I think it has come up. And if the supplier has not paid, it is in relation to 16.2C actually. If the supplier has not paid the taxes to government, I am required to reverse my ITC. and I need by end of 30th November of subsequent financial year. But subsequently, whenever that person guy pays to the government, I can reclaim the ITC, just like the earlier point, Rule 37A is just one more color. So here also I can reclaim my ITC as soon as that person, supplier, pays to the government. Maybe there's no time limit specified there. So there again, 16.4, this is a 16.4 exception case. Then section 73, RCM taxes paid under section 9.3 or 9.4 read with rule 36.3. Rule 36.3 says that if under any order I am paying taxes, okay, under section under 9.3 or 9.4 because of fraud, suppression of information, etc., where 74 elements are involved, I am barred from claiming ITC. But it doesn't talk about the 73 provisions. The 73 are, bona fide or genuine, mistakes because of which I may have not paid taxes under RCM under 9.3 and 9.4. So if I'm getting a notice under 73, I can claim, but it is by implication, because 36.3 rule forbids you from claiming ITC if you are paying the tax because of fraud, etc., suppression of facts, etc. But other side, if there is no such elements involved, fraud, etc., and you are paying the taxes under section 73 order, 73.9 order, then you can claim input tax. You can claim input tax whenever you pay the tax. Again, this RCM tax, even now, URD purchases made during the initial 3-4 months of GST law came in, still we are paying taxes and people are claiming ITC. So again, 16.4 is not an excuse. The 16.4 is not a problem. Filing of return and in amnesty scheme, some amnesty scheme came last time, and I think it ended on 30th June 2023. And also you're filing returns, pending returns subsequent to revocation of cancelled registration because on account of long drawn appeals which are allowed in your favor. So in those cases, you are not something reluctant to file your returns, but because your GST registration was cancelled and you were not able to file return for maybe last 12 months, 13 months, 2 years, whatever, depending on the facts. So when you are filing these pending returns after your revocation of cancelled registration, you should not be penalized because of 16.4. This is only a in an interpretation or interpretation or proposition. There's nothing in law. So in these cases where registration is revocation of cancelled registration happens, you can claim ITC no matter it is beyond 30th of November, because you were forbidden to file return because of your GST login was disabled, or your registration was cancelled for those reasons which are not in your control. Taxes payable with retrospective amendment. So we have seen this section 7(1) AA, which came in effect with retrospectively from 1st July 2017. So from that date, 1st July 2017, if some club has not taken registration, they have to take registration now and file the return. And under section 40, they have to file the first return and bring in all the outward supplies they have done from day one till now, which also mean they also need to claim corresponding input tax credit for the last 4-5 years, over which they were they were following the interpretation of exemption, that their supplies between the club members and club per se, both the sides are exempt. So even in this case, just paying output tax is not what the law expects. You also need to provide them the corresponding ITC claim benefit. So in this case as well, 16.4 doesn't come on your way. And then section 88, where the company is under liquidation, where CIRP, corporate insolvency resolution process is underway. And there is a notification 11/2022 under section 148, which explicitly gives an exception to section 16.4 as well as rule 36.4. So any company which is under liquidation, the CIR, the liquidation professional need to obtain a new registration, and whatever from that date on which he takes new registration, subsequently whatever inputs he receives in the maybe in the name of in the GSTIN of the company which is under CIRP, still that is allowed to be taken as a valid input tax credit, even if it is beyond 30th of November of subsequent financial year, during the course of CIRP process which is underway. So here also special provision notification is issued to create a exception to 16.4. So even section 87, where there is amalgamation or transfer of company which is happening, where there is a time gap between the effective date of that arrangement to take effect and the order of the court, tribunal or high court, which is giving the order. During that passage, so section 87 actually talks about liability of the companies who are under scheme of arrangement or amalgamation. So when it talks about liability, the corresponding input tax credit during that passage also need to be allowed, and those credits can go beyond 30th of November deadline what 16.4 gives. And then this is in case of death of a taxpayer, and there is a transfer of business from one person to another person. The another person, the transferee or the legal representative of the taxpayer who is no more, need to obtain a new registration. And just like 18.3 section we discussed earlier, he also need to transfer all the input tax credit which is lying in the GSTIN of the deceased taxpayer, and allow it to come into his GSTIN. So that also is an exception where 16.4 doesn't come on the way. So all these are so many situations which are there. If just imagine if 16.4 has to put a saving clause to create a exception, all these the purpose, the 16.4 I know how 64 will look really difficult. It will be a very long subsection, I would say. So because even a lawmaker should be knowing that there will be many situations where 16.4 people may not be able to follow. So in those cases, 16.4 had to be given a treatment of directive provision and procedural provision, and not a restrictive or extinguishing character of a extinguishing prescriptive feature to 16.4. And that, I suppose, that could be the reason why 16.4 requirement is kept separate from 16.2. Otherwise, because it shows the color of 16.2 conditions, they could have very well, they were under their power to include 16.4 time limit also under 16.2. They could have done it. When they have not done it, they have kept it separate as a separate subsection. There is a meaning. There will be a meaning for that, and that is the reason it is kept separately. And it should be, government should be appreciated for that, so that it is avoided. It can avoid a lot of difficulties and inconveniences for people. If it was there under 16.2, because 16.2 starts with notwithstanding anything contained under this subsection, and then it uses the word unless, and then it puts all the 6 conditions, which means after the unless, all the 6 conditions which are specified under 16.2, they are all mandatory. They have to be followed. If 16.4 time limit also comes under 16.2, one of the last point, then imagine it becomes it will become a kind of a confiscatory restriction on the property of the taxpayer, who is at no fault. He has done his business bona fide manner. He has paid his taxes. Just because there is a slippage of maybe 1 month, 2 month, whatever it is, in filing the return on time, he should not. His property, government doesn't have power. Should not have power to take away his property just because a small slippage in the procedure be followed. So two or three more things, situations. And then this is what I was talking about: non-negative construction of 16.4 and negative construction of 16.2. Because 16.2, as I said, the word unless word denotes that whatever is follows the word unless, all those are conditions, mandatory conditions to be fulfilled. Unless you do that, you do not get eligibility, entitlement to claim the input tax credit, non-negative construction. Whereas 16.4 doesn't have same word, because we have discussed earlier, both 16.2 and 16.4 are restrictive. We are saying that, but there is a subtle difference. 16.2 conditions are mandatory, and because and 16.4 conditions, 16.4 time limit condition is not mandatory, not substantial, not substantive. Okay, even if one doesn't follow 16.4 time limit, goes beyond the 30th November, in my humble view, it's a good case for you to fight, win. And the next point is overturned exemption claims after protracted legal battle. You may travel up to like Safari Retreat, it was under 75 context, but in case you are under the, you are following the interpretation of exemption on your supply, and you have been claiming consistently ITC benefits from beginning, maybe after 4, 5 years, 10 years, Supreme Court overturns, the High Court decision which would have come in your favor. Then what happens? Then Supreme Court, which has overturned your exemption benefit, it will have its effect from day one. From day one, you will be required to pay taxes on all your supplies, which also mean you are eligible to claim the corresponding input tax credit also, which you must have purchased over a period of so many years in the past. So it is similar to the earlier point where I mentioned. I think what's the point? Pending returns, I think. So curative effect of late filing fees on the late claim of ITC. When this came, this also came as a support alternative remedy or a contention by the taxpayer council in Tirumalakonda, and as well as that Patna High Court, where late filing fees, if I'm paying late filing fees and filing my return, it is a return, it's a valid return under section 2 subsection 117. So when it is a valid return under section 2117, I am removing the the creases or the faults I have made in delay in filing my return. So the March return I'm filing in December with payment of late filing fees should be assumed that this return is of March only and not December, because the delay whatever is caused, interest anyway I'm paying on the liability. But in addition to that, I'm compensating government of paying the late filing fees for the delay I have caused. So that curative effect, or it is called late cut, I am bearing it. So it should be considered as return filed within the time, even if there is a delay. And this is only a proposition. This has not sailed through successfully in recent judgments. But it is also a point which need thought and views from from this allied group. So inability to file return on portal section 40, 16.4 time limit due to cash flow. This I already discussed. Because of cash flow problem, you are not able to file return. Cannot be an embargo, or cannot be a restriction, or cannot be called as a violation of 16.4, because you are ready to file the return as per law, but your portal is not allowing. So with this, whatever I could gather during past 1 week or 2 weeks, I tried to put it across in front of you. Again, thanks Rajesh Kumar sir and Jatin sir for all the valuable inputs. and maybe some lacunas here and there, technical, because GST law, we all know it's still evolving, and there could be certain loose ends here and there. The words we should not take it literally to discuss or to argue. Sometimes we need to see the overall objective purpose also of having the entire provision of some words which are used, like Venu sir said, input tax credit compared to the definition. I also need to see the definition, what is the argument is, but it's a good, welcome those, thoughts and, issues. I'm ready to correct myself if something has gone wrong. There can be multiple propositions, but these are the two propositions I was really, feeling fascinated to, do some research and come up with my thoughts on today's discussion. Thank you, Vinu sir, and over to you.
Thank you, Ganesh sir. Any questions to the participants, sir? Jatin sir and Rajesh sir? Anything?
Shobha. Shobha. Hello.
Yes, sir.
No, I have no comment to offer. You just hear what everyone's views are.
Rajesh sir?
Yeah. Yeah, I think, sorry, just I had discussed this also with Ganesh earlier. Ganesh can just go to the slide of that taken vis-a-vis availed comparison, that points which you had made.
Yes, sir.
No, probably, no, you had put the take and availed something at one place. First proposition, probably. First proposition.
This only, right?
Open up the
no. That is no, your first proposition heading one you have put.
Okay.
Monitor open avatlada.
This one, sir?
Okay.
Naveen,
Yeah, I think I'll just the word which was having entitled to take credit. Entitled to take credit. You had highlighted take and avail comparison something.
This one, sir, at the top, second
Yeah,
line.
okay, yeah. Here, the only point I was that the take is not standing in isolation. It is entitled to take. So the point which I was discussing with Ganesh also is this take has to be, is only talking about the entitlement to take. It is only a prescription where the action is availment. So the differentiation, I mean, the take is only permitting you, but your availment should happen through the process which is prescribed. That is the only point which I want to highlight. This take or a taken cannot be read in isolation. It has to be read along with the words entitled to take. So this entitled makes the things much more meaningful when we read together. So there will not be any conflict if you look at it from that perspective. That's the only point which I wanted to highlight of the presentation. And I think, as we said, a lot of views which came out, discussion, and again, now I think the members are all now matured enough to consider these points and use whichever is appropriate the way they want to use it in their respective cases and presentations. As the law is still to get settled, there is nothing like this is a conclusive view, this is the right, this is wrong, nothing of that sort. Probably in a litigation, we need to try whichever is required at that point in time to take the arguments and the case further. That's all I would like to add. Thanks, Ganesh, for the detailed and wonderful presentation, collating different aspects from different provisions relating to Section 16.
But I was not still happy. I wanted to spend more time because we have to end somewhere. That's why I ended today.
When over to you. When over to you.
Yes,
Right. Can we get a thought on that 16.4 with reference to this reverse charge tax credit? which we are paying now. And in one of the slide, I think he has stated that
Yes.
we can 16.4 may not be applicable to that. So can we look into that entitled to take credit or entitled to avail credit will become like here, sir, in this section where he was trying to highlight on that RCM taxes with reference to 9.3 and 9.4.
Last point.
Yes. I couldn't.
So here,
can
madam,
you, yeah, can you just
Rule
explain?
36.3, if you see Rule 36.3, I'll just open that. It says that no input tax credit shall be availed by a registered person in respect of any tax that has been paid in pursuance of any order where any demand has been confirmed on account of any fraud, willful misstatement, or suppression of facts. So this is a restriction on claiming of ITC.
And with regard to this previous point, proviso to section 41 row 2 read with rule 37 is subsequent reclaim of ITC on payment of taxes by the supplier to the government. Here, is the law trying to tell that if the person has not paid it within the time limit of claiming under section 16.4, can the law tell that I should reverse this credit?
Yes, sir, exactly. That is amendment to section 41. Just for your benefit, I will read that. You need to reverse your ITC if that other person has not paid the taxes to government.
See, the payment of taxes is on a credit provisional basis technically when we look at the taxes. So are we trying to then tell that any, say if you take a composition dealer, I would have taken the taxes based on the IFF, I would have taken the credit, and the credit gets reflected, say for the month of April I have purchased, but it gets reflected only in the month of June. So technically, should I not take the credit in the month of April? I should take it only in the month of June. Is the law trying to tell that?
Just 1 minute, sir.
And if I extend it a little more, for 17-18, I have paid the taxes. The supplier has paid it after 19, assuming because the last day of return was credit availment was extended up to 31st March 19. It was paid, say, in April 19 or May 19. Then should I have reversed this amount and then claim the credit? Where is the law trying to point out? That is one point I was trying to look at.
So rule section 41, section 41 subsection 2, it says that credit of input tax availed by a registered person under subsection 1, which you are already availed by filing a return. The tax payable whereon has not been paid by the supplier shall be reversed along with the interest applicable by the said person in such manner as may be prescribed. So it is directing toward the rules. You need to reverse if the supplier has not paid the taxes. Under 16(2)(c), there is a restriction, right? If he has not paid, you are required to reverse. And reversal happens by virtue of Rule 37A. And 37A says, overall, by 30th of November, you need to make sure you are reversing it to subsequent financial year by 30th of November. You need to reverse that amount along with interest. And on subsequent, payment by the supplier to the government, you can again reclaim that amount in GSTR 3B. And that doesn't come on the 16.4 is not a restriction there.
So here, say we'll take a example to understand it. Say for the month of March 2018, the other person has paid it in April 20, assuming that. So I should have technically reversed it in that particular September 30th was the due date at that particular point of time. I should have reversed it. But the supplier has paid the taxes with applicable interest. So once we can take that particular contention, I think if you go to your other next last slide also, you have told that there is a curation which is possible. One stand where it tells that curation is possible with filing of late fee. So can we not take the stand that the supplier has paid that cure interest along with the late fee, whatever is applicable for those particular taxes, and I will be put back to the same position as which was already there, and there should not be any reversal, because today these are the points which are coming up also when we look at the audit scenarios. So they are asking us for the interest now on this particular amount because the other person has paid taxes at a later point of time. They're trying to ask us interest. So luckily, as of now, they have not asked for reversal, but they're asking for interest. So once we consider this point, so the other person has already paid it with interest. So should it not be an aspect which could be considered where I'm trying to tell that the supplier has filed his returns and he has put me into a state where the taxes have already been paid as such. It is
Yes,
only
sir.
told taxes to be paid, but where is it mentioned that it has to be paid, or I am not that particular point. I think if any of the seniors also could address, it will be helpful.
I want first Ganesh to address this question, especially the way Ganesh presented it, that restriction is vis-a-vis the prescription, vis-a-vis the limitation, that he was analyzing 16(1), 2, and 3 harmonious reading aspect. Maybe referring to that, can Ganesh answer this question?
Chandrasekhar sir, can you please, if you don't mind, repeat the question shortly?
The question
For-
is the credit should, the other person, the supplier has paid the taxes, but he has not paid it within whatever limits which have been prescribed under 16(4) or under section 16. So he has paid it only at the later point of time, assuming what happens there. And I gave you another example where it was a composition dealer, and for the month of April, he has filed the return, he has paid the taxes only in the month of June, in the June return, because he's a quarterly filer, April, May, June. So should I technically not take the credit in the month of April, and should I take the credit only in the month of June? That was my point.
Rajesh sir, please share your thought. Meantime, I will just going through some section.
In respect of quarterly filers, it is only filing is quarterly, but payment is monthly. See that percentage what they fixed, the government is okay with the shortfall. So that's why they mentioned it is a payment should be a monthly, so it should be quarterly. So I don't think there'll not be any issue in respect of claiming monthly ITC.
So as soon as that amount is paid by the supplier, the government, I can claim this ITC in my next return after he has paid the amount. The problem is we don't have a mechanism to check whether he has paid or not. That is something missing link.
Ganesh, can I reframe
Yes,
the
sir.
question of Shekhar?
Yeah.
Whether the conditions of section 16(2) has to be met pre-availing ITC, or even if it is sufficient if I meet it post, claiming of credit. what is the point in time this condition should be fulfilled? Is it a precondition or a post-condition?
It's a precondition, sir. It's a precondition.
No, that means to say that I can't lodge my credit unless the supplier has paid.
Yes,
Is it what we are trying to say?
yes, sir.
In the
I
sense,
can claim.
he has
I
not
can
filed the
claim
return
with
in this month, but I've claimed a credit. Then it becomes
I claimed
ineligible.
it. So it's a provisional credit.
Now there
I
is
can
no question
avail.
of provisional credit, no?
Hmm.
Now that provisional credit, in my understanding, is removed, no?
Yes, yes, removed. Good.
So I was just trying to support your line of argument as to the 16(2) conditions has to be fulfilled. When it is to be fulfilled is not an essential condition. So in that context, if we read 16(4), how does it come out to be? Is a one line of argument to say that limitation is not, I mean, the limitation what is prescribed therein cannot bar me from taking a credit sort of a thing. So something like that is what is a proposition. We can try to correlate 16(1)(2) condition when to be fulfilled and read with 16(4). Maybe some proposition can be derived.
Sir, 16(2), the condition, payment 16(2)(c) condition has to be fulfilled. Even without fulfilling that condition, in case you are availing the credit, you are availing it with a condition that you are required to reverse that credit before 30th of November next year, as per 41(2), section 41, subsection 2. So it comes with a embargo. 16(2) doesn't matter. It says you are having a entitlement to claim, but even if that other person has not paid, you can still avail, and you have availed the credit. You need to compensate the government by paying interest by 30th of November. So 16(4).
Where is this proposition coming from law?
41(2), sir. 41(2). Can you kindly read?
Okay.
Can I read for you?
Yeah, I mean, others has to pitch in for
Yes,
me because
definitely.
these procedural things and all, I want others who are well thorough in that has to come and Venu. Yeah, you can read, you can please read.
Yes. Subsection 2 of section 41 says that the credit of input tax the credit of input tax availed by a registered person under subsection 1 in respect of such supplies of goods or services or both, the tax payable whereon has not been paid by the supplier shall be reversed along with applicable interest by the said person in such manner as may be prescribed.
So, which section you're reading? Sorry, can you just repeat once
Subsection
again?
2, 41(2), sir. 41(2).
Okay. The amended
41(1),
section 41
41(1)
subsection
says
2.
that you are entitled to avail credit, eligible credit as per 16 conditions. 16(2), 41(2) goes further, few more steps ahead and says that the input tax credit availed, but the supplier has not paid that amount, then you need to pay interest and reverse the shall be reversed. You need to reverse the ITC as per the rules. And it is again putting an additional proviso, provided that where the said supplier makes payment of the tax payable in respect of the aforesaid supplies, the said registered person may re-avail the amount of credit reversed by him.
The act
In such-
GST Act. So good, Ganesh, good.
So proviso 241(2) gives him the opportunity to re-avail the credit as long as soon as the person pays the tax to the government. Subsequently, it can be after 2 years, 1 year, 6 months. So 16(4) time limit slide. I took this instance just to correlate, because 16(4) doesn't come on the way for re-availment of credit subsequently after it was reversed in compliance with Rule 37A. Rule
Ganesh sir,
37
if we go by that, then every month, let's say, I mean, the previous month's invoice, I mean, I'm filing, September month return in October. So I will be claiming the invoices dated September. Let's say I file my returns on 18th, but my supplier files his return on, let's say, 22nd. Then every month I'm supposed to reverse under this 41 subsection 2 and then reavail after the supplier files his return and presuming that he's paying the taxes as well. So
Yes,
if it is a precondition, then if it is treated as a precondition, then every month this should be the course of action to be followed, isn't it, sir?
correct. Correct. There's a time up to 30th November next year for the supplier to pay. If he doesn't pay, you don't need to do every month. You can keep a track on it and you
But
can
where
do
is
it.
the law telling that it is 30th November?
Precondition.
Yeah, rule 37A. Because it's in the manner as may be prescribed, it says, no section. So it is directed to the rule 37A.
I mean, the point I wanted to bring in here was like, I mean, how do we say it's a precondition?
I think when we are looking at this, we need to look at it in two bits. One is before 2B was introduced and after 2B is introduced, probably then it could have a little thought process difference is what I look at, because you had earlier there was a provisional basis of 20%, 10%, 5%.
All
All these
that is,
things are also
yeah.
being given. So when we consider all those points for the pre 2B era, I think still we can still take the credit on a provisional basis, and the other person should have paid the taxes with applicable interest is what my view is, because it could be satisfied post facto also, and not a precondition is my view.
So presently it is precondition is what is your take, Shekhar sir?
I feel that should be the methodology, because now as of now,
Then every month we have to reverse everything that comes in 2B because we don't know when I will file and when my supplier will file the return, isn't it?
that is right.
Huh.
So that is where a little of even I was not clear on this particular aspect. So that's where I put it across here now.
So condition is simple, sir. If the supplier is not paying taxes to government, you have time
No.
until 30th of November subsequent year to reverse the ITC in 3B along with interest. If you don't do that, you will be there is a proviso in 37A which says that interest is also interest to be paid thereon following 30th of November.
Okay, Ganesh sir, we'll take 3 scenarios. I file my return 18th of October. Supplier files return 22nd of October. I have availed all the credits which has come in my 2B. Second situation, I've filed my return on the same date, like 18th of October. My supplier has paid the taxes next month. Third situation, he has paid next year within November. So do we mean to say in these 3 scenarios, I need to bear the interest for the specific point in time? So how does it work then? So this month I've claimed all the credits which has come in my 2B. I filed 18th, supplier filed 22nd. He paid taxes after I availed. So how do we fit this situation to section 41(2)?
No, see,
And
section, 1 minute, see, we can come
I
out with
think
any number of
we
scenarios.
got into
Section 41(2) is very clear. I don't think there's any confusion in the language of 41(2). The confusion is in our mind as to how we will comply with it. Anupama, tell me,
and
is
the
there a
point.
confusion in understanding the plain language of 41(2)?
No, sir.
sir, not pay taxes, does it mean like, does point of time of discharge of taxes has relevance over there, sir?
41(2) very clearly says if you take credit and your supplier has not discharged, you reverse the credit with interest. which means 16(2)(c) has to be fulfilled as a precondition for you to take credit. So if you are going to take credit of a supplier who is not filing his returns within the due date, you run the risk that you may have interest liability if he defaults in filing his returns. Keeping that in mind, you take credit.
So, I mean,
Exactly, that is the point I was just trying to say. It is a post-availment condition which is coming in 41(2), not a pre-availment condition.
Yes. So post-availment
Now,
condition.
if it is post-availment, then interest should not apply. It has to be a precondition for interest to be validly recovered.
so we keep
Because
due
the
date as the
supplier
benchmark,
has
sir.
paid it along with interest, sir. If because the supplier has paid this amount with interest, will it not curate that effect of the credit being?
No, see, there's no scope in 41(2) to go and search for the logic. Supplier has delayed, so he will pay interest. You have taken credit before he made payment, you also have to pay interest. It is unfair or fair, that's a policy matter. The law is very plain and simple in saying that you have to pay interest if you take credit of without supplier having paid the tax.
So do we keep due date as the benchmark for?
No, you can't change the language of the section. You have to go by the language of the section. If you take credit and a supplier has paid tax 19th night, 20th morning, 21st afternoon, 20th afternoon, whenever he has paid, then you're okay. If 20th has come and gone and your supplier has not paid tax and you have taken credit, you have to pay interest.
So the proviso to Rule 37A talks about interest only if the ITC is not reversed on or before 30th November. So
No,
can
no,
we
but
take the view that
41 will guide, not 37A.
but in the manner as may be prescribed, and if we go to the rules talks about interest only if it is not reversed on or before 30th November.
Naturally, madam, if you don't reverse, you will be liable to pay that amount along with interest. Not through reversal, but by cash.
See, but now from 41, we have gone and got lost. We started with something else.
In fact, I think that is what I wanted to stop, because we were on 16. We went into a different discussion.
Correct.
So we come back to the conditions. Why I was just trying this 16(2)(c) was not the purpose. Essentially, I want to drive to 16(2)(d), whether return filing is a precondition or a post condition. So that is where I was just trying to bring an attention. But this discussion is totally different discussion, which may be another topic. But 16(2) condition was a precondition or after condition, there is a requirement of certain fulfillment. So those are the things which we need to look at. That's the observation which I wanted you to consider. Right. I think Venu has dropped off because some power connection thing. Any other points or any other?
Madam, you have some point or we just left it in between?
Sorry?
Anpuna, madam?
Yes, sir.
You had, we did not discuss that point. You had some point around RCM, right?
No, Annapurna Kabra, ma'am. Yeah.
Yeah. Actually, that's what I was reading. Rule 36(3). I was just trying to point out Rule 36 sub Rule 1 actually. So that was not discussed because that is also one of the issue with reference to 16(4). So that was a point I thought I'll bring out. Otherwise, fine. Yeah.
Right. So any other points, any questions?
That's all I think.
I think Ganesh from my side also that's all.
Yes, sir. Yeah, thank you for all for the patient hearing. Thank you so much. Bye.
Thank
Good
you.
day.
Thank you.
Good day.
Thank you.
Thank you. Thank you.